A very good evening to all of you, and welcome to the weekly market update presented by SC Securities. So, as usual, I will be talking about this week's market performance and also some key highlights related to economic news, and also, as usual, the global commodity market updates and financial market updates as usual. So, starting from the market news related to Colombo Stock Exchange. So this particular week, we could have observed a mixed investor sentiment throughout the week, whereas price declines and increases both reported in both of the main indices in Colombo Stock Exchange. So talking about each of the trading days separately, starting from Monday, there are two indices, ASPI and S&P SL20 index, both gained prices up to report to ended up in green zone from its previous peaks closes, whereas ASPI index gained 67 points to close at 10,421.74. It's not that much of an uptick, but still it gained. And S&P SL20 index also gained 32 points to close at 3,617.86. And whereas if we look at the turnover levels for the day, that was relatively lower compared to last week's daily average turnover. It was only amounted to be 1.1 billion. And also on a positive note, as we've been discussing about this last week as well, foreigners continue to stick with the buying side, and they have reported a net purchase of 53 million for the day, whereas only 12 million worth of sales were reported. And if we have a look at the Tuesday's trading session, again ASPI gained another 69 points to close at 10,490.74, whereas the S&P SL20 index declined 24 points to close at 3,593.31. So the price declines that cause such kind of a price decline in S&P SL20 works mainly due to the price declines in index heavyweights, whereas the index was dragged down by the counters LOLC, CLC, Commercial Bank, and also LOFC. And whereas Selico Insurance contributed to give 74 points to ASPI to report the said increase. And foreign buying for the day reported the topped at Valuable Finance, whereas selling topped at Hema's Holdings. So for the day, again, foreign purchases were topped at 34 million, whereas only 90 million worth of sales were reported. And if we have a look at the turnover levels, that was slightly increased from the previous day's one, but that was also relatively lower, only amounted to be 1.3 billion. And the opposite kind of a behavior have been observed in the two indices during Wednesday's trading session, whereas ASPI declined by 32 points to close at 10,457.81, whereas S&P SL20 index gained a slight increase of 0.64 points to close at 3,593.95. So again, selling foreign purchases were top for the day, amounted to be 27 million, whereas only 6 million worth of sales were reported. And the said decline in SPI was majorly due to index heavyweights, the price declines in CLC, LOFC, Expo, Bill, and LOLC, but S&P index gained this so-called 0.64 points of uptick due to the counters JKH and Haley's. So again, turnover was only amounted to be 1.3 billion, slightly decreased or slightly lower from previous day's turnover. And the same mixed sentiment could have been observed during the Thursday's trading session as well, whereas SPI further declined by 6 points to close at 10,451.71, whereas S&P SL20 index managed to gain 17 points to close at 3,611.71. And the decline in SPI was majorly attributed by the price declines in index heavyweights, whereas S&P SL 20 index picked up due to price increases in LLUB, LFIN, and also COM. So turnover was slightly picked up to 1.7 billion, and foreign purchases for the day reported the highest during the week and was amounted to be 172 million, whereas only 22 million of worth of sales were reported. So during the last trading session of the week, it's on Friday, we could have seen both of the indices ended up in green zone. SPI index gained 3 points to close at 10,455.32, and ASP S&P index also gained 27 points to close at 3,639.12. And turnover was significantly higher from the rest of the previous 4 days. That was amounted to be 4.5 billion, and out of this, around 2 billion was the contribution made by the Agalavatta plantation, the crossing that took place. Whereas on contrary, say foreign selling topped on Friday amounted to be 100 million, and whereas only 67 million worth of foreign purchases were reported. So for the week, SPI gained 0.32%, and S&P index also gained 0.59%, and net foreign inflow was reported to be an amount of 194 million. So despite the slight increase that took up during the last trading session, the sentiment still turned out to be negative one, with all the economic uncertainties, the looming economic crisis, state crisis, could have been considered as a negative impact to investors' sentiment. So, looking at the economic highlights for this week. So, as you already know, and we discussed this fact in last week presentations as well. So, as the last resort, SL government has decided to seek support from IMF in order to overcome from this looming debt crisis. And also discussions have already started with the IMF authorities, and the IM set of IMF delegates also visited Sri Lanka last week. And a special report of 2021 Article 4 consultation with SL is yet to be published, and that was requested by the opposition, whereas the government said only the draft was received. So on that, IMF has mentioned that it is willing to publish the said report on today, so which the majority of the parties are looking forward to have. And on top of that, prior to seeking the financial support from IMF, Sri Lanka should go for a possible debt restructuring, and it was also mentioned that Sri Lanka seeks to get the support of a global law firm in order to give out a possible debt restructuring. And one of the local-based analysts have told that Sri Lanka should have given the priority to local debt over foreign debts ahead of the talks that is to be taken place in the next month at Washington. So the requirements when granting the said IMF loan will not be 100% favorable for Sri Lanka, and we can possibly expect that several reforms and restructuring need to be taken place in entire Sri Lankan economic and the entire system when granting such kind of a loan from IMF. And again, moving to next one, the Sri Lanka NCPI based inflation shows at 17.5% for the month of February. That was recorded to be an amount of 16.8% in January. And whereas Colombo Consumer Price Index based inflation figure was recorded to be 15.8% for February. So that indicates the cost of living and price pressures are being weighing on the average citizen from around the island, other than not just limiting for the people who live in Colombo and such urban areas. So Food inflation said to be record a value of 24.7%, and also non-food inflation also went up to 11%, both the price increases in food and non-food categories. And whereas a professor, a renowned economist from Johns Hopkins University in US, Steve Hank, said that he made an advice to Sri Lanka through Twitter that in order to curtail the ongoing economic crisis in Sri Lanka, especially the recent fuel hike and the currency crisis reported from the non-availability of forex reserves, uh, can be curtailed somehow by adopting a currency board, whereas he is expecting Sri Lankan inflation to go up to 49% for this year. Owing to the current economic crisis. So his recommendation is to adopt a currency board to have an extremely effective exchange rate to keep the inflation under control. So this particular professionals are being giving recommendations on behalf of Sri Lanka. So government should consider the viewpoints of these particular professionals, both from local and international context when addressing the economic crisis that we are facing right now. And when it comes to treasury yield, 91-day treasury yield hits 12.1%, and that is the first time to cross the 12% benchmark level after May 2012. So the 3-month treasury yield went up by 75 basis points from 11.35% to 12.1%. And so 6-month yield also went up from 11.05% to 11.98%, 93 basis points up. And 12-month yield also went up from 11.15% to 12%. So steep increases in yields are said to be recorded for the fourth consecutive session. And as I mentioned you before, the 91-day yield, the 3-month yield, was the first time to cross the 12% benchmark level after May 2012. And rupee continued to depreciate against the currency, especially USD and GBP. The impact was huge, and that is basically due to the adoption of free float system, other than what we kept as an artificially fetched system for a longer period of time. So owing to that scenario, rupee continued to depreciate, and it was quoted as somewhere around 295, and some of the commercial banks have quoted it for about 300 level as of today. So when it comes to global context, the supply concerns spiked commodity prices, especially the oil prices, however, recorded to gain another weekly gain, but slightly edged by the very end of the week as European Union remained to impose the sanctions on Russian oil, whereas United States promised that they're going to release more oil from their oil reserves. And gold continued to gain its again another weekly gain upon the no material progress in the peace talks between Ukraine and Russia. And although the surging US yields and aggressive monetary policy, monetary tightening, they entered the bullion sphere. So oil prices continue to go up, and aluminium prices also had headed for another weekly gain, and that was again due to the fact that the sanctions imposed on Russia on behalf of the ongoing war. And copper prices also record another weekly gain owing to these particular tensions caused by Russia-Ukraine war. And as you already know, it's been a month since the start of this war, and this particular thing has also impacted on financial markets as well. But anyhow, world stocks headed for its second consecutive weekly gain amid all the tensions caused by the Russian-Ukrainian war and also the monetary tightening of US Federal Reserve. Major US stocks also rallied on Thursday, gaining over 1% in all the three industrial indexes. And Asian shares, however, incurred losses during the Friday session, but some of the market, especially Japanese market, ended up with gains. And Chinese tech stocks also dragged down Chinese stock markets on Friday due to the reason of a hawkish monetary stance of US and the shifts in Chinese economic policy and also the tensions that are going in Ukraine. So that's basically the things I could share from my end. And here, over to you, Hari. You can share your views.
Thank you, Sachini. So let's look at gold over the past few days, what has happened to it. So looking at it, it is trading in the area of daily support 1940, 1960. So previously, gold made a high of 2070.63 and made a small comeback below the level of 1940, 1960 and made a low of 1865.06 on 16 March. So after bit consolidating over the area of 1940, and the area of 1895. Now what we can see is it's trying to surpass the area of daily support 1940, 1960. Once it is about 1960, we might be able to see it heading towards the psychological area of 2000, and from that key area we will be able to see whether it would actually reach the daily resistance 2040, 2060 again, or whether it would get rejected from the psychological area of 2000. So at the moment, since the price is actually trading above the moving averages, we might be able to see some sort of a bullish momentum. The RSI is in the mid range, which is 56.02, and so therefore the daily, if it's sustained above the daily support, we might be able to see it heading towards the psychological area of 2000. Else a rejection from this daily support level basically could make the daily support level a new daily resistance, and it could basically consolidate again in between the area of 1895 and the daily support 1960 in between. So looking at our all share index, we were able to see some couple of lows. So one low is basically March 9th, which is 10,143.73, and the other one is March 16th, which is 10,054.21. And after reaching that key areas, after making those lows, the index managed to make its way towards the daily resistance level 10,450, 10,500, trying to break about 10,500, trying to close about 10,500. So we can see a couple of rejections happening over and over here. So on 25th, we were able to see the index opened at 10,451.67 and made a high of 10,591.58, made a low of 10,451.67 and managed to close at 10,455.32. So if it closes about 10,591.58, which is about 10,500 as well, so we might be able to see it heading towards the daily resistance again, 10,950, 11,000, that psychological area. Also breaking above the 18 EMA, which is 10,731, which basically closed on Friday. So RSI is in the mid range, which is 38.40 as well. So since in this area of daily resistance 10,450, 10,500, we see some couple of rejections there. This means there's some sort of supply that's greater than the demand that's happening. So if it gets countless rejected, we might be able to see the couple of lows that was recorded on March 9th and March 16th. So this can be a pullback towards the lows again. Else if it closes about 10,500 and make its way towards the 10,591.5 and breaking it through, we might be able to see it heading towards the 11,000 psychological area again. So looking at Sunshine Holdings, which is our topic of the week. So here also what we can clearly see is from the daily support of 40.42, the price is getting rejected over and over again. This is quite a demand zone for Sunshine Holdings. So we had couple of rejections in February. Also we had some sort of rejections in March. Also beginning of March we had couple of rejections. So even now what we can see, it is consolidating in between the area of the support. So once it is above the 42 rupees and continue its bullish momentum and also breaking this declining trend, we might be able to see it heading towards the next daily resistance 51.53. So since this is a heavy a demand zone, we might be not be able to see some sort of a bearish momentum happening. In case if it happens, the next daily support would be 31.5, 33.5. The RSI is recorded as 42.67 at the moment. Since the price is also trading below the moving averages, it indicates some sort of bearish momentum as well. So once it is above the moving averages and breaking this descending trend line, we might be able to see it heading towards the daily resistance 51.53. So thank you. I hope you'll have a wonderful week.